Ladies and gentlemen, is the Acid Capitalist welcome you back to another sun-drenched macro transmission from the very edge of tropical madness. Broadcasting to you and you. Broadcasting to you direct from the course, not from where the river crosses into Cambodia, but from the glorious St. Bart's. Acid capitalism with a twist of line, who knows, but certainly with a terminal distrust of consensual thinking. I hate the stuff. And so I was thinking that maybe it's time for a flash acid update, because it feels as though the lows are maybe in, for now at least. Maybe I'm just being a financial heretic, a bit mad, but isn't that what I'm supposed to do? Anyway, I think we're entering the first, I want to call it a flicker of a violent reset higher in risk prices. And it's got to be fast and violent, like a car game, a video game, to keep you or preclude you from participating. And so I thought it would be, I thought it would begin last night, the Sunday trading session. I really thought that very strongly yesterday. Maybe it was the bottle of rosé and the beach cabana and good times. I mean, you don't know this, but recently in my private life, I've been having a super good time. Anyways, last night's trading session was muted. Maybe what I'm about to say to you is therefore, but for sure it's preposterous. But maybe it's been timed out. I'm going to persist regardless, because I think a rising tide will gather force soonish, a swell, if you like, into later Monday trading. I think it'll be slow at first, and it could be violent. Is this the shipping news from St. Bart's? Anyway, you see that abrupt price descent from, when was it? It was Thursday last week, noon to Friday lunchtime. It was a gift. A whale was obviously being liquidated. The street feasting, the Wall Street feasting on the carcass, buying the risk, pulling the portfolio apart, buying risk at low, excruciatingly low prices, showing no forgiveness. The Lilliputians, the brokers, really nasty motherfuckers, and no mercy to the Levitans that sometimes push too far the envelope of the volatility. But when that swell receded and the sea pulled back last Friday afternoon, what did it reveal? To me, I saw a huge air gap above, an air gap that needs filling. So we rise now. We rise back to the Plimsoll line, the 5,700 on the S&P. Perhaps further. Perhaps we make new all-time highs. At this point, I cannot dismiss the possibility. The odor, the smell, it's not the stench, the smell of the Y2K, the tech rally from 25 years ago. Christ, it's a long time ago. But the odor is strong. The force is strong within you, Luke. My muscle memory, it identifies with these 4 standard deviation days that have become too common in the last week, 10 days. Now, they may fry your mind, but trust me, I've seen these before. I've seen them too many times. If you live a long enough life, you see what very few others see. But back in the late 1990s, the Fed cut rates into a growing domestic economy. Sound familiar? They did that last October. And when that happened previously, we make legends. Why? Because we create a bubble in domestic equities. So I say to you again, the fuel is there. The fire is coming. Now, I'm not talking about a permanent bottom. I'm talking about something which is tradable. And it's your duty, my friends. We got something spicy on the table. A significant tradable low in the S&P. You know, we call it the stonks. And again, with all eyes on the return to the Plimsoll, the line in the sand, my old flame, 5,700. Jeez, let me catch my breath, reassemble my thoughts here. Like I said, I was on the beach yesterday with Brian, my intern, my cameraman, and some good other folk. Brian, such a professional. He didn't want a beer. What did he want? He wants to be a legend. And you know what? I respect that. We talked markets. I talked markets. I always talk markets. I'm very boring. Sometimes I'm a poet, depends who I'm talking to. But I spoke with Brian on how to survive the violence and ride the uptrend. Because this isn't about playing it fucking safe. I told him. Sometimes my language is appalling. This is not a safe podcast, ladies and gentlemen. It is not investment advice. This is about becoming something more. And I got to tell all of you wannabe masters of the universe, if you were not trading Solana, the crypto babies, Ethereum, if you were trading AI, the mother of them all, the NVIDIA, going into this meltdown, quite frankly, you're not serious. You're not serious contenders. You are not even in the arena. You're not chasing greatness. Why are you not chasing greatness? I've said it before. You've got one chance at the beginning. When they give you a little bit of money, you got to find a scary thing of beauty, something contentious, something angry that flares, that pulsates higher, a vertiginous uptrend with a bad volatility attitude, the bucking bronco of legend. And you got to ride that mother damn thing. You got to ride that monster. No diversification for you, baby. Let's see what you're made of. That's the key, as you'll discover. But it's not just riding the move, it's managing it, it's knowing when to take profits. It's sitting on your hands, sitting on your ass, it's striking again with discipline. This is the acid way. Awareness, courage, intensity, discipline. You see what I did there? ACID. Awareness, courage, intensity, discipline. Cute. I want you to be volatile. I want you to be violent. I want you to be legendary. But anyway, Bitcoin, Bobby Digital, it needs to trade much, much higher. I think it does. Why? Because Bitcoin's performed really well through this crisis. I hope I'm not tempting fate, but like down 25, 30%. That's a really good test. I mean, the fact that it was only down 30% with the little crypto babies, Solana, Ethereum down, 65%, that's really impressive. As I screeched at Brian the other day, why the fuck did I buy? Did I tell you this? I bought Solano, potato. But if there's, why I tell you why, because if there's a bounce in risk, and I think that's a likelihood, if there's a bounce in equities, if there's a bounce in the long bond, if it's risk on again, those assets which sold off the most, these are the ones that are going to bounce back the most with the greatest vigor, the greatest violence. So Solana will get one of the biggest bits. And I think in the event of that it's risk on again, you're talking about taking a ride on the sugar train. The Solana, the Ethereum, the Express, the highway. BlackRock, the SARS of Wall Street. Don't they want to tokenize treasuries? Imagine with the blockchain, seeing where every dollar raised through the treasury market created by the government, seeing where it gets spent. Clarity, transparency. I love that. It's their pet project. It's the money guy's pet project. So that's going to help. But the takeaway, if risk is on, Solana will catch a massive bid. That, Ethereum, they're kind of the same. They're both fighting to be silver or platinum, or the platinum general metal complex, but in the digital world. Solana's more the upstart. It's younger. Ethereum's the old guard. Solana's just more of the hot kid on the block right now, I think. And so it probably has a little bit better of a bounce than Ethereum. Who knows? I'd own both. But let me say again, the performance of Bitcoin has been stellar, interstellar, fantastic through all of this. I know gold made new highs, but if this was 5 years ago, Bitcoin would have been destroyed, dropping 80% or more, for sure. I mean, I could not be more bullish on Bitcoin right now because they're just mopping up all of the supply. Whether you know it, whether it's strategy, whether it's kind of GameStop shenanigans, corporates, miners, everyone is trying to lock up the Bitcoin supply. And there's only so much supply. And eventually, when it's all gone, there won't be any sellers left. And where will you be? And where will the price of Bitcoin? It'll be more than $2 trillion. I think it'll be the equivalent of where gold trades. Who knows? A prophecy. But let me just say, there is no durable bottom, none whatsoever. If Treasuries continue bleeding like a pulp villain in a Scorsese final act, Scorsese or Tarantino? I think I prefer Tarantino. Equities cannot soar. I am talking nonsense. If bonds are getting butchered, equity soaring, bonds are getting butchered. That's a mirage, people. You're in the Mojave Desert. You've been on something wicked. That's not a rally. That's a shimmer. If treasuries keep getting slaughtered, there is zero rally. Only more sledging with intense speed, lower and lower. But I think the long end's going to get. I think we have. What did I say? We liquidated. The little broker guys came out and they fed on the carcass of a big fund that had to puke on Thursday, Friday. We're seeing distribution in the markets. I think it's turned. But if it's not turned, what we're seeing, and if you're tuned in, you're seeing it too. You're seeing international capital extraction from the United States. Now, this is not from the newsletter crowd, but this is real capital. Heavy, urgent, global, RSVP, respondez s'il vous plaît. There's just not enough Swiss chocolate and neutrality to hold all that flow, all that jazz, all those dollars. I can feel it. Can you feel it? Maybe a sting operation. Black ops with friendly fake hedge funds, imagine. Definitely hostile central banks from Asia, shorting US risk assets. A displeasure, a retaliation of tariffs, the threat of trying to make DJT look like Liz Trust. Anyway, regardless of my febrile imagination, I'd fallen into the logic trap. Maybe you did too. Sell dollars, I thought, yeah, buy what? The princeling problem, the buy what? The who follows next? Everything looks ugly. This existential angst of what to buy. Gold, sure. If you fancy historical reenactment, why not? Gold is the safe asset story. It's just a shame about the starting point. Question mark. Would you be trading one bubble for another? Maybe. But quite frankly, I don't like the safeness of this play. But I'm going to say, why not? I'm going to give it to you. Why not? If you can pull it off. I keep saying that I've been at fault for calling gold stupid names, like overvalued, using nuances like it's total price capitalization. It's $20 trillion. But really, who cares if it's bubble-like? By that I mean, the market capitalization, the $20 trillion. That's a big deal, and it requires plenty of heavy lifting if you're going to keep propelling the gold price into the stratosphere. But we are here to play bubbles. Like banks, what did Jesse James say? That's where the money is. That's why we keep breaking into banks, and that's why we buy uptrends. It's where the money is. So let's put that 20 trillion in context. There's 600 trillion plus in global wealth. So shut up, Mr. Asset Capitalist. But for me, I'm not thrilled by it. Yen. Can we stop talking about the perception of safe risk-off assets? The world is fundamentally changing. And the yen, don't make me laugh. Or maybe I'm going to cry. I've not looked at it today. I sold yen Friday. And let's see if I rue the day. I believe I'll live or die reputationally by the yen. I think it's got me. Bitcoin I've discussed. I get Bitcoin. But finally, this US exceptionalism and the princeling problem. the what to buy if you're selling dollars. Is it really an issue? Is it for debate? Well, it kind of is, because hot money fled into the US in the third quarter of 1929. Remember, I said 29, but I could have said 99. Both occasions, the Federal Reserve had cut interest rates, almost oblivious to the strength of the domestic economy, and it set off a chain reaction higher in domestic stock prices. But as you know, when the stock market crashed in the third quarter of 1929, money left. And to repeat myself, it didn't go to Switzerland because there's only so much chocolate and neutrality to absorb that flow. It's not big enough. So where did it go? Where does money go to die? When confidence breaks and capital, it doesn't care where it lands. It just wants to move, because sometimes it wants to go anywhere but the dollar. I call this the vanishing point. I think we saw that last week. The moment when international risk capital flees, when confidence collapses, and motion becomes the motive. Velocity over veracity. I am vibing on the poetry again. I don't know what that meant, but I like it. I'm going to keep it in. So yeah, the S&P. Forgive me, I've got a sore throat this week. But the S&P could rise again. 5,700. It's not a fantasy. It's the play. But categorically, I got to repeat after me. It's the play only if the bond yields stabilize, only if the bleeding stops. If the bleeding stops, you got to buy stocks of Solana. You don't buy tills, you buy Solana. You buy the thing that's just been absolutely ravished and broken, because that's the thing that's going to go crazy to the upside. But only if the Treasuries stop bleeding. Otherwise, it's killing me. I'm going to have to stop talking. Otherwise, this is no bottom. Just smoke, a smoke break. A smoke break on the elevator to hell. My gut says we'll not see hell. Well, not just yet. My gut says the descent. The descent's just a little bit crowded, people, and we might need to rise first. Like, go and check some of the higher floors. And so, anyway, before my voice fails me, I thought I'd lift my skirt and tease you a little bit, give you a peek of what I did last week. Because for the first time in like forever, I kid you not. We've traded mics staying at Maison Blanc Bleu, my Caribbean house. I raided Brian's interactive brokers account, and I would not recommend this, people. I was acting like a junkie that had been too cold turkey for too long, and I got him to buy 12 contracts in the SOFR March-June spread. Betting on a free Fed rate cut or two between now and mid-June. Margin, only $200 margin. I mean, me and the kid, we were running a notional of 3 million. We were smoking cigars. We were legends. And why the SOFR? Because we're getting 4 standard deviation events. I got muscle memory. You know what happens? Things break. And you know what happens? The Fed cuts. And you know what? It's not priced in. So I also needed some June, August, because, the Fed's always late. So I needed some June, August too. But the margin was higher, not 200, but $500. I mean, the one you want to buy is December, but then the margin is $1,500, which means unless like you're really, really, swimming in a big bucket of your own money, it's kind of hard to get a big notional. So we stuck with the March and the June. And did I tell you, I broke even more rules. Leveraged ETFs, never buy. 2x, 3x, never buy. I think I once said that, right? Wrong. With my monkey brain, I was chasing the dragon, and I bought a 2x Solana fund. I think the code is SOLT. Think of sold out. Take the D, replace it with T. T for toi. Toi is French for you. I don't know. Again, I'm a poet. But midweek, I couldn't take it anymore. And like I say, by the end of the week, I was buying an ETF. I was buying dollars and I was selling yen. That's like YCS. Oh my God, there's an aircraft coming. Can you hear it? It's flying above me. Have you seen, anyway, back to YCS dollars. Again, the yen. Again, against, I was buying dollars. I was selling yen. I shot the sheriff. Why? Because those candlesticks. Have you seen the price candlesticks? Do I have to explain candlesticks to you? Do I have to come round to your house with my chart book? You know, I've got 17th century rice traders literally screaming in my ear, screaming with their samurai swords, buy dollars. I got to stop dogging. I was on the edge. I swear I nearly capitulated, but I held. I held my dollars. Was it small? I don't know. Revelation deferred till another week. Maybe I'll look at it today. Maybe I won't. And the SOFRs, oh my God, we traded them. I had to sell the near month contracts. I had to swallow the margin of those Junes. I went from 12 Marches to zero. I was trading. I felt like a hedge fund. I felt like a legend. Went from 2 in the Junes to 7 contracts. Ended the week with just under 2 million. 2 million bucks, baby, in notional. But the Solana purchase, that saved my ass. I think we're up 17, 18%. So the P&L for the week, kind of flat. In a shitty week, we were up 3%. Die another day. Anyway, as I leave you once more, as I bid you my farewells, my fond farewells, I want to say that today I'm flirting with hope. I'm sipping something cold and I'm watching the tape this week. But remember, lows are only in until they're not. So that's me. I'm finished with my lunchtime, or is it bedtime stories? Are markets hallucinating as the acid capitalist finally lost it? I don't know. My advice would be stay acid. Send me a message. You know, I get lonely. Come to the summer camp. Regardless. Hope you're enjoying the show. Hope you can spread a little bit of gratitude. Hope you can press like, yeah, we like it, 5-star, 5-star, I'm 5-star. I hope you can pay a visit to Patreon, Substack. We're on Twitter, we're on YouTube. I mean, I am a global virus, or I aim to be. Anyway, I bid you farewell. Thank you so much, my friends. Thank you so much, my family, my brothers and sisters. Thank you so much for tuning in. And until another time, bisous, kisses from St. Bart's.